Hey everyone, Mark Galashevsky here. This quick video will show you an example of how we use secondary indicators to support our forecasts. In this case, our example is the bottom in Chinese stocks earlier this year. Here's a chart study we published on April 3, 2020, soon after China's stock market bottomed. The upper graph on the chart is the Shanghai Composite Index, and the lower graph is China's 7-year bond yield divided by the Shanghai A-shares dividend yield. Such bond yield-stock yield ratios can be useful information at important turning points in financial markets. In this case, the ratio supported our wave count for the Shanghai Composite, which indicated that Chinese stocks had passed a significant low in March 2020. Notice that the ratio had fallen to parity, just as it did after major price lows in 2005 and 2008. Therefore, we wrote in the April 2020 issue of Asian Pacific Financial Forecast and Global Market Perspective, the ratio, quote, fell in March to 1.04, a near-record level. The only two other times over the past 15 years that the ratio fell that low, the Shanghai Composite began strong uptrends almost immediately. And indeed, history seems to be repeating again, as Shanghai stocks have since increased by more than 20%. Conventional observers offer various explanations that try to explain the strong move up. Some say it represents investor recognition that China's economy has stabilized. Others say it represents short sellers unwinding their positions. Some even point to comments by Chinese media to encourage share buying. Yet we think it's just a rising wave within China's long-term wave pattern. And given the weight of the evidence we observed around the March lows in Chinese stocks, it was predictable. Many people criticize Elliott's wave principle as subjective. We understand that criticism and agree that it's not always reliable. That's why we also consider secondary indicators when formulating our opinions and forecasts. Technical analysis is both science and art, and we try as best we can to keep our practice of it evidence-based.